I think if people had the choice of deciding, you know, whether to partner with a bank or partner with anybody, they'll probably not want to partner because you can go faster alone, right? But the reality is that the mere name fintech already means finance. And the way finance has been structured in many economies is that it sits with banks. So many of the things that a fintech is trying to improve with technology has to do with like proper collaboration with the financial institutions in that economy. So it's not as if fintechs are just always wanting to partner with banks because there's fun or like because it's interesting. Is that they can't actually do anything without the right financial institution license or partnership or both. So that's the first foundation. Yeah. So the reality is that let's first treat the basic question. What is a win-win situation for a bank and a fintech? So a win-win situation is that a bank can leverage its license and all the money it has spent in like building up compliance, building up the fraud team, building up the back office. They have branches, they have all these things that make them very compliant and accessible, right? The win-win situation is that they can sweat that asset. So the way to sweat that asset is by having many transactions go through those their back office systems. And remember, back office includes people, process, and infrastructure, right? So the infrastructure in this case is like their bank. So, they would like decent footfall into their branch. Or if you think about infrastructure, their banking app or their core banking application services, they would like, to be processing multiple payments. They would like to be receiving multiple deposits, etc. So the win-win situation for a bank is that this heavy investment in fixed assets, in variable assets, or whatever you want to call it, can pay off through increased transactions. Now, the way you get transactions is from customers. So for a fintech, the value to them in partnering with a bank in this case is that, they can leverage their agility, they can leverage their customer savviness, right? And, their emphasis on user experience to attract customers to a bank. But of course, no fintech is going to want to tell you or going to want to admit that at the end of the day, especially depending on the kind of fintech you're building, you are working for a bank somewhere because all the deposits, right? If you take Nigeria, for example, yes, you might have a microfinance bank license, but you will still have a lead commercial bank, right? So all that deposit you've been generating and stuff, still has a touch point with a commercial bank, right? So the win-win situation is banks take their compliance, they take their know-how, they take their relationship with the CBN and all these things, and they help a fintech build front-facing applications, or they help a fintech build things that can appeal to customers so that when they get more customers, they get more revenue, they get more transactions, etc. That news would potentially impact how fintechs and banks partner around the world. But I think the first step is let me just even try to clarify a few things on fintech. So at the core of it, remember, fintech is finance and tech, and in finance, there are majorly like six functions, right? So there's payments, savings, lending, insurance, but literally there are like six core functions that a bank performs, right? And as a fintech, you can pick and choose where you want to play. Like that's the traditional model. So a payments fintech, for instance, is like a Flutterwave, or a Paystack. You've built a payment gateway, you have an acquiring bank partner. Then a savings and lending fintech, for instance, is like a microfinance bank. So, all of them, Money Point, Kuda, right? Some people that might focus on maybe insurance is very less likely in Nigeria because of the attitude to insurance, but there's our bar and a couple of things. Now, Some people have decided that they will play in the payment space, or they will play as a middleman between the end customer. In fact, so let me paint the value chain for you. So you have an end customer. So the end customer is me and you, right? But we will probably be using a fintech. So let's say in Nigeria, we're using a money point for banking. And then a money point connection to a bank can either be direct or through a middleman. But that middleman in this case, we still always refer to the middleman too as a fintech, right? Now, then the fintech will now connect to the underlying bank. So there are like 4 layers. So when you give your bank deposits, and I'm already entering the story of what's happening in the US right now. When you give your bank deposits, now they will create an account for you to put the money in. The bank in Nigeria is most likely a member, or in fact, by force, you're a member of NDIC, the National Deposit Scheme. But in the US, if you're a state chartered bank, so the good thing is in the US, you don't need to be a federal bank. You can just, like, now imagine if Lagos State was issuing banking license and you don't need like CBN to issue the banking license, that kind of thing, right? If you're a state chartered bank, you can be a member of the National Deposit Scheme, or you work with like Federal Reserve, etc., etc. Now, that is if you work directly with the bank. So if anything happens to that bank that is a member of NDIC, your money will be insured up to the specified limit. So recently in Nigeria, NDIC increased the limit from, I think it was 250 to 5 million. 5 million, that's a lot. But yeah, NDIC increased the limit from 250 to like 5 million. But in the US, it is $250,000. But here is the trick. If you don't give money directly to the bank and you go through a third party like that middleman, or through a fintech, you are only eligible for something called pass-through insurance. And you will realize that pass-through insurance is also applicable in the US as it is applicable in Nigeria. So pass-through insurance is when money gets to the bank, but it didn't come directly to the bank. So it came in through a third party. So whenever fintechs want to sell their services, or like maybe they're doing banking, they will say, oh, your money is held at FDIC insured, in Nigeria's case, NDIC insured bank, right? But what they don't tell you is that if the money is not held in a properly documented way, and in like a way that is approved for pass-through insurance, the day the middleman goes bankrupt, there will be problem. So in Nigeria's case, if you give money to an MFB, MFBs are direct members of NDIC, so 5 million. But a classic example in Nigeria will be MMO, right? So MMO will be like a third party that you can bank with, and then they can have pass-through insurance, because at the end of the day, the MMO is a single client of an ultimate bank. So let's say I'm an MMO. Let me call myself Paga or Pagan, so that I don't use a real company, right? Now, at my bank, let me say my bank's name is Guaranteed, right? I have one main account, and all of my customers' accounts are like, they're like subscribers, or they have shares in that one main account. So if I have 10 billion with Guaranteed, and Benjamin was banking on Pagan, right? Benjamin's 2K is a part of that 10 billion. Isaac's 3K is a part of that 10 billion, but all of them is in one account. But the good thing about the pass-through insurance is that if Pagan goes bankrupt, in this case, if the Guaranteed goes bankrupt, right? Benjamin, Isaac will be insured up to 5 million, which is brilliant. So what happened in the US was that the middleman went bankrupt, and the insurance corporation is saying, I don't have any jurisdiction over this middleman. He's not a bank. He's not part of NDIC, right? Typically, the people that banked through the middleman should get passed through insurance, right? But then there were issues with how it was recorded, like how the ownership of funds was recorded at the bank, right? And that just led to a mess. But why did the middleman go bankrupt in the first place? That middleman manages something called a ledger, right? A ledger is just like a record of credit and debit. Now, the middleman manages a ledger. Oh God, it's quite complicated. So the middleman manages a ledger, and instead of partnering with one bank, right, he's partnering with a couple of banks, which is helpful for redundancy or helpful for any other thing you want, right? So me, that I'm a fintech called Pagan, and I'm issuing my end customers individual bank accounts or business bank accounts, right? I would think, oh, my money is with an FDIC insured bank. But one day there was discrepancy over the record of money that the middleman had for each fintech depositing money through him into a bank and the actual funds sitting in a real bank. So that was the first basis of the problem, that there was a discrepancy between what the ledger balance was, about $95 million, and the money that was in the partner banks. So it's just been a mess because end customers are crying that when you people are marketing this thing to me, you said my money is sitting in an insured bank account, blah blah blah. So why is it taking so long to resolve the money? But I think the takeaway for many people is that there's something called pass-through deposit insurance, and the fact that people advertise insured bank accounts doesn't mean your money might be insured if they don't do it the right way. But the second thing is that in deposit insurance, they always care about human being, not number of accounts. So if you, as a customer, right, of, let's say, Pagan, right, you have an account with the underlying bank the fintech has partnered with, right? When it's time for deposit insurance, they will add all your monies, both the one you put, so the one Isaac put through Pagan and the one Isaac went to go and open. Have you not seen cases where you have a Wema bank account, but when you want to bank with a fintech, maybe a savings or investment fintech, right, they also issue you another Wema bank account. So if Wema bank is going to go bankrupt, right, they will add all Isaac's funds together to determine the 5 million or to determine the limit that is insured for. So that's what created that whole mess. And it's been going on for a while. So the first step is ask the fintech you are banking with. So let me give an example. In Nigeria, MFBs deposit. So MFBs, right, deposit money banks, which are commercial banks, and a particular select group of banks or depository institutions are members of NDIC. Clean and fine. So once somebody has that license of MFB, you can know that yes, they have your money insured. But when you start looking at other fintech types or other something, I don't know if you've seen on the bottom of any website where a financial technology institution are not a bank. So the question is, which license do you have? Is not whether I'm a bank or not. So there are many different license categories and types. So you need to first know the license that the person you're dealing with, the fintech you're dealing with, is using. And then you can actually email their compliance team, and they have a duty to respond to you on the insurance and the insurance detail, right? If you're banking with if you're doing business with a like deposit, I won't call it deposit taking because the meaning of deposit is different from what people just always call it. Deposit typically is money that can be loaned out, but holding of funds, like the way you put on MMOs, is just money that they cannot loan. So literally at each time, the ledger of an MMO, right, must match the real money in a bank account. Simple. So Pagan as an MMO now, right? If it has 20 customers, in this case, let's call them subscribers, right? That's the easiest way to think about it. 20 subscribers, and they all have 2 million with it, right? That 2 million at any time T should be 2 million in a bank. But a real depository institution, sometimes your money is not with the bank. Like they've loaned out your money, or they can do whatever they want to do because they have capital reserves and things that back them up. You get. So the first step is know the license of the entity you're dealing with. The second step is, if you're not clear on how your money is being held, ask them, email their legal team, email their compliance team, right? And then with those two things, you should be fine. It's unfortunate that the burden right now is on the consumer to find out, all these things. But I think with this Synapse and Evolve Bank issue in the US, there'll be some new regulations, or there'll be some enforcement around how fintechs also display how they disclose the way people's funds are held, right? Funny enough, if you look at all those fine prints at the bottom of websites, you will see many information there. Like they will tell you a bunch of things. People just always click accept terms and conditions. But like if you read the terms of service or the partner agreements, you would really learn a lot about how these relationships are being handled. So a middleman, the reason why as a fintech I will work with a middleman is to save me time so I can go to the market fast. Now, a middleman is something we call banking as a service provider. So if you've ever heard BaaS company, that's a middleman. So what they've done is they've gone to partner with a bank or multiple banks to expose the bank's capabilities of banking, issuing cards, or lending, etc., right, to other fintech clients. Now, because they've already built out, the relationship with those banks, they can issue NUBAN, they can track inflow and outflow, they can do all these things. You that are a new fintech that just wants to build a savings app, you don't need to go and be partnering directly with all the banks or whatever. Or if you wanted to build a payments app, right, you don't need to go and be partnering with all the banks for fund transfer, right? You can just partner with a middleman that has already done all the work, and then you start issuing. Over time, most people always end up kicking away the middleman and going direct. But the second reason why people go to middleman is because they also don't have the leverage to speak directly to a bank. I was talking with Isaac that before you need to be a particular size before you can go to a bank and tell them that, come and be my partner bank or my settlement bank, right? But if you're small and you're just starting out, it's easier to just work with a middleman, a banking as a service provider, right? And then once you work with a banking as a service provider, you can go to market, test your idea, and if it's working, you can now take them out and build all the core relationships you want. 3 names of middlemen in Nigeria. So just think of banking as a service companies at the moment. So there's Anchor, I think there's Mapurad, and a bunch of them like that. Because fintech is relatively new, we've always had to work around licenses. May I interest you? Do you know that the MFB licenses that fintechs are using wasn't designed with fintechs in mind? It was designed for actual local small banks that will be in one location. But fintechs, they are digital first, right? But they realized that, with the MFB license, it's cheaper to obtain. I can issue bank accounts, I can take deposits, I can do lending. So I'll use that to run my deposit-taking fintech ops, right? So for a BaaS company, they're also thinking, okay, so the way you think about license is this. What service, you write on one Google Sheet, what service do I want to offer customers? What licenses allow me to do this? Is there one license that allows me to do all of it, or do I need to get multiple licenses? That's why people always end up with multiple licenses. So for a banking as a service provider, the question you ask is, what services am I really offering? What am I doing? right? So in this case, he can say he's facilitating communication between a fintech that might be licensed because, hey God, fintech is very complicated. Some licenses have what we call agency, meaning the person that is using you doesn't have to be licensed. Once you have license, you will cover them. But some licenses don't have. Anyway, so the bank license provider will think I'm facilitating connection between a fintech client and a bank. Then you now go to the bank to say, come, I want to do this. The bank audit team and security team will say, I cannot connect to you. You need to either have a CBN license, because when CBN comes for audit or when somebody comes for audit, they will say, who is this person connecting to you? Which approval do they have? So that's why most BaaS companies will end up with PSSP. It's not really because the PSSP is mandated. Do you get what I mean? Right? So they end up with PSSP. The other good thing is that once you have a CBN license in Nigeria, you can go and work directly with NIBS. So instead of relying on the bank's connection to NIBS, the middleman can bypass can bypass the bank, get the API directly from NIBS, so they get the cost cheaper. So it will be 3.5 naira, right? So that's how people always end up with the license that they have, right? But with workarounds, it always has comma. You use an MFB license, but you're operating in multiple locations, the CBN will come for you. But they won't come for you when you are small, they come for you when you are big and sizable, right? So because they have limited bandwidth. But anyway, so that's how to think about licensing. In the US, there's no license for a BaaS. Like, they have something called a money service business and a money transmitter license. My Nigerian mentality is, if I want to go to US, I must get money transmitter license. I don't want to hear whether there's license for what I'm doing or not. So long this is the fintech license in this country, that's what I want. But like technically, there are some things that you do that don't require licenses. So let me give you a framework of thinking of partnerships, because sometimes, me, I'm in media. Somebody will go and take a public commodity and say, I've partnered with this person. If the thing that you have is publicly available to everybody, it's not a partnership. In fact, you're probably just a customer. A partnership is when it has some level of strategic implication, some level of exclusivity, right? So in this case, if you get a bank's intra-bank API, because it is not publicly available, that is a type of partnership, right? But when you get interbank API from NIBS, something that everybody that has a license can get, that's not a partnership with NIBS. Like, you can't come and announce that, Pagan Limited has partnered with NIBS to send money to bank accounts in Nigeria. No, that's a commodity. But if you come and say, like, I've partnered with Guaranteed to make sure that guaranteed customers can send money quicker or faster, blah, 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 blah. That's a partner, because not everybody can have guarantees intra-bank API. So even if you have license, they can say they don't like you, they don't want you, bam, 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 bam. You fail their EDD, you fail their DDD, blah, 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 bam. So think of partnerships as something that is exclusive and strategic. So a classic example is, as an IMTO, for instance, you need something called an authorized dealer bank. That's the bank that you would work with when you're bringing money into the country. Before now, they're the ones that are supposed to go and trade your FX on the I&E window. It has changed name now, to NAFEM. Now, they're the ones that are going to trade your FX and give you Naira, right? That is a partnership. But what is not a partnership is when you open a bank account with a bank. Everybody can open bank accounts, right? But a partnership is something that, there's some level of exclusivity and strategic implication, right? And, stuff like that. So that's how to think about it. Correct. Yeah, that's it. It's a partnership. Not everybody can have that relationship with Titan. Like to the point where Paystack Titan is listed on NIP's list of beneficiary institutions, right? It is exclusive, it is strategic. Paystack probably had to get an MFB to do that partnership. Like there was a lot of thinking and work that went into it. So from a product point of view, I think everybody is now clear on the angle of partnership. There's a different type of partnership though that is on sales side and like unlocking new channels. But for today, we can stick to the product side of Bank-Fintech partnership. Yeah. The product capability that the Paystack Titan partnership enabled is issuing accounts and holding money. Because when Paystack was just a PSSP or a switch or a payment licensed institution, they were not licensed to hold deposits or hold money. That deposit word is so they were not licensed to hold money, right? But with Paystack Titan, you have a bank that can issue you a NUBAN, like a national uniform bank account that is accessible within the payment system in Nigeria. And then it has the capability to hold money. So if you want to do payouts with Paystack, Paystack will issue you a bank account. You fund it with Naira, and then they can now use their either NIP, which is the NIBS electronic fund transfer API, or their own personal direct connection to each bank to help you disburse money to multiple beneficiaries, right? So that's how to see the whole picture. It's unfortunate because the way the regulation works in Nigeria is even going to be different from the way it works in other parts of Africa, right? So this is how it takes shape in Nigeria. When you look at the service you want to offer and the partnership that is required to offer it, if it's a vanilla service or a basic service that everybody is familiar with, no problem, just go ahead. But if it's something new that you're trying to introduce, or if it's something a bit more quote unquote innovative, exotic, then there's a lot more work. So as a fintech, when you collect the appropriate license, right? One of the requirements is bring a letter between you and your partners. If you've not yet signed that letter because you are just starting, if it's draft, bring it, let us review it. So the regulator literally wants to be in the know of what two licensed or potentially licensed institutions are doing together. That's number one. Number two, they want to be in the know of how it will be presented to the end customer. So let me tell people a fun story. When we were doing AOO in 2018, we were doing it with a partnership with Providus Bank. Now, we were trying to avoid getting our own license as either an MFB or anything by saying, oh, this is a product of Providus Bank, or we are just their technology provider. Okay, so we went to CBN, and then it was time for demo. I demoed the app, etc. When we sent SMS, we did not see Providus on the SMS as the SMS ID, like the sender ID. When you even launch the app, you barely see Providus. Is AOO. But you said this is a Providus product. Why are we not seeing Providus branding on the product? So now that takes you back to all the things you've seen, like powered by XYZ. The reason why you're seeing powered by Paystack, powered by this, is because those entities have been licensed regulatory-wise, but also security-wise, industry-wise. There's a PCI DSS license that payment gateway companies need and stuff. So you can also use that PCI DSS badge to show that now me, they provide the service. This is me, I'm providing the service to the customer, right? So the customer can also have peace of mind that, oh, I'm dealing with the right entity. But when you now want to be playing hanky-panky to say, oh, this is a Providus product, I'm just a technology provider, I beg you, they won't answer you, because from even the branding and the way it's structured, they know that it's not a Providus product, it's an AO product. You're just working with Providus as a bank, right? So the way regulation has impacted partnership is that, one, fintechs in Nigeria have to be licensed. If not, no bank is going to want to talk to you, right? Because they are that scared. So the good thing, let me tell you how it works. Fines in CBN for banks or licensed for banks is very easy. Very, very easy. Banks have reserve with CBN. Once they corner you for infraction, you go just see debit spam on your reserve with CBN and you need to top up again. So like the fine is so easy, it's not back and forth. So that's why banks are very guarded in what they are doing, right? So fintechs in Nigeria have to be licensed to play. And then the second thing is you need to get a letter of no objection, or you need to make the CBN aware of certain partnerships you do with either a bank or a fintech, right? So that's how regulation has impacted it. If you look at another market like the UK, they have an equivalent of MMO, which is mobile money. It's called e-money, right? Now, as an e-money institution, you would have a license if you want to hold money, right, and issue e-money, but you will need a bank as your safeguarding partner. Remember, I told you the logic of mobile money or e-money. Whatever is on your ledger has to be in a fiscal bank. So the UK makes it more explicit to say whatever money you have in your ledger has to be in a safeguarded account with the bank. So that one, you can't touch it. You can't use it for loans. You can't do anything. So whenever you're going for your EMI license, you need to carry a letter from your safeguarding bank. So those things always, they receive some kind of approval from the regulator. So the first question you can ask is, based on what you want to offer, is there a license for that category? The good thing about license is that they have tiers sometimes, right? So if you look at microfinance bank, there's unit license, but there's state license, there's national license, right? So that's one thing you should know. So the thing you want to do, is there anything called agency banking license in Nigeria? That's the first question you ask. I don't think there is. I know there's a body called SANEF, Shared Agent Network, blah, 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 blah. You can speak to someone there, etc. But because the very nature of agency banking makes use of something called a payment terminal, POS, there is a license for that one. So it's called a payment terminal service provider, right? So if you want to give payment terminal, okay, there's a license for agent banking. It's called super agents. Aha, I just remembered. Yes, David, you're correct. So if you look at the super agents, that one allows you to recruit agents, right? Then the PTSP allows you to provide technology, so to give the POS, right? So if you're looking to hide, what you need to do is, which most fintechs don't like because it doesn't allow you to build brand equity leading up to your own launch, is you need to be a product of the licensed entity, meaning the branding is going to be of that licensed entity. So let me give you an example. So if you want to do agency and merchant banking, you go and find someone that has a license, that has a super agent license, someone that has a point of sale, like a PTSP license, and then you can be the staff there, but the branding will be XYZ company. So for instance, let's use a money point, right? If you want to do agency banking, money point has so agency license, the super agent license comes under payment. Yes, I think it's regulated under the payment systems division, right? So MoneyPoint has a switching license. So it encompasses super agents, PSSP, and everything else inside it. But bottom line is you can partner with the MoneyPoint. You can run the operations, but from a who files returns to the central bank, it will be MoneyPoint that they will see. From a who connects to NIP or who connects to NIP. So in your case, because PTSPs have to connect to an aggregator, right? So in this case, NIPS was the only aggregator. They brought in UPS recently. It has to read MoneyPoint, which is the licensed entity. Then from a Marketing to the customer. That one you can now say, okay, money points in partnership with or something that will just try to choke you there. But it's really hard to hide and provide compliant service pending when a proper license is possible. So the only way is if you find, like now, if you're doing lending, there's a money lender license at the state level. So you can go for that money lender license, but it caps you at 25 million or something like that, right? So you can't really loan a lot. You go for that license, then once you trial your idea, you can now go for MFB, unit MFB. And even unit MFB still has tier 1, tier 2. So bottom line is you either play in a space where there are tiers and you can go for the smallest tier, or you play in a space where you know that you are doing labor to understand the operations, but the branding and stuff, you're not yet building the brand equity. More challenges plenty like a desert. I think one unspoken challenge that people don't tell you is that regulators have very, and I don't blame them, they have a closed-minded approach to certain things. If they don't have a closed-minded approach, people will just be boboing them with all manner of things. Crypto this, you want to use the video coin to do this. But they have a closed-minded approach to many things. So what happens is this. You can be telling a regulator that, boss, I don't need this license because I'm partnering with the bank. The bank is the one doing all these things, right? Me, they'll say, no, they are not hearing, right? Okay, let me give you another example. IMTO license, you cannot do outbound. CBN has been very clear since that you cannot do outbound. You want to go and tell them, boss, this outbound, I'm not doing it. I'm not taking dollars out of Nigeria. My dollar is actually in the US. That's what I'm using to fulfill dollar transactions. They say, no, 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 they're not hearing. If you want to onboard customers from Nigeria, you need to get a banking license to do outbound. Do you get? So there's that posture of close-mindedness, right? It works to safeguard the ecosystem, but it can just be annoying, right? The second thing is many fintechs, the reason why they're raising all this money and stuff is that they can, reduce operational costs, right? All this overhead that banks are bearing, 2,000 branches in Nigeria, 200 branches in Nigeria, and they can just grow fast. It's not going to work, right? Again, for the safety and soundness of the financial system. But if you look at a digital bank, I don't really like all my customers I'm serving them online. Why are you telling me that I should go and get a national microfinance bank license because the customers are coming from Lagos, Oyo, and all these places? You get? So I think one of the challenges is that we don't yet have a dedicated fintech license category, right? And it has always been a debate in many markets that should we actually have a dedicated fintech license? In the US, there's something that they were motioning in 2016, 2018, whether to create a special bank license. Those people flagged against it in the US as forward thinking as it. Like they want to create a special banking license. And this is something that fintechs can easily get because when you do MTL, you can only send money, like money transmitter. When you do money transmitter, you can only send money. You cannot really hold and do a bunch of things that you want to do, right? But with a special banking license, you can even take deposits, and that lending and that interest rates, income from interest, like that rate difference is always very sweet. That's what banks are using to enjoy. But so those are the first challenges. Like one is the closed-mindedness. Two is that fintechs today don't yet have a dedicated license category. But the third thing is that if you don't if you don't have the right market nuance, you will be confused because what is written down in the regulation and what people are doing doesn't often tally. So you're coming to expand to You're coming to expand to Nigeria, and you're like, my competitor is doing this now. Why can't I do this? And you tell them, my boss, it's about your risk appetite. Though. The day CBN comes for you, are you willing to shell out money for fine? Or are you willing to be shut down? Or blah, 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 blah. So it always just makes the conversation between leaders, global and local, very difficult because you're like, boss, yes, somebody is allowing Nigerians to sign up, but you don't know how they are approaching it. So if you now come and do it and it should burst, problem. Number two, some questions leaders always ask is they want yes or no answer. You cannot give them yes or no answer because it's not black and white, right? You want to give them nuance, but they might not have that patience, right? So it causes some level of internal discord within fintech organizations because like the regulation is not always strictly followed. And in cases where there have been special exemptions, they are not always announced, right? So that's a third problem. A fourth problem would be like fintechs themselves are only just waking up to certain realities, KYC and fraud management. KYC is extremely important if you're going to prevent your system being used for money laundering, if you're going to protect your customer from being defrauded. But because everybody wants to grow fast, they simplify the process, right? And then now Kasala will burst, and then people are left bearing the brunt. So fintechs need to wake up to the new reality of like, compliance. Compliance is key, is my competitive advantage. And I think the final thing I'll say is that like when you look at the market size, we don't have enough data for proper market analysis. Many fintechs will go and raise money on, 200 million customers. Of that 200 million customers, how many of them have smartphones? Of that 200 million customers, how many of them can spend more than $10 a day? Of that customer base, blah, blah, blah. So like the data that exists has to be primarily collected by you as a fintech. You will not be wondering, am I the National Bureau of Statistics? Why would I go and run such large sample size to just determine stuff? So like that data that is absent really causes problem when you're trying to make a business case or a business plan, right? So if we can have all of this fixed, I think things will move faster. I think one of the key differences that I've seen is just one, the license categories available, right? So, question, is there a mobile money equivalent in the US? A license for mobile money? I don't think so, right? And it might be because, that market, when they got card, like they've been using card for a long time, the penetration is high, bank accounts too, penetration is high. So there was really no chance for mobile money to erupt. So if you're coming from like a Kenya, you'll be going there looking for a mobile money equivalent license. You will stumble a bit before you now find your feet. So first thing is like, what are the license categories available? Then second thing is, what is the disposition of the bank to partnership? So what you find is that certain banks are more open towards fintech partnerships than others. Do you know the funny thing? The reason why the reason why certain banks are more open is because of what we always call risk appetite. A tier one bank is scared. And I've told you why. Cash in CBN is plenty. Once CBN just convince them that they are wrong on something, bam, minus XYZ. So, I mean, a regional commercial bank too has that same fear because they too have capital reserve requirements. But the upside for a small bank, for like a regional commercial bank, is so much that even if you find them 5% of the annual revenue, it's fine. Providence Bank had like, I think they were trading 11 to 14x of their, what I say, license class, right? Like, because they were a regional bank, right? Like, 2018, 2019, 2020 time, like, and it's still now, many people are still using them. But like the transaction volumes they've pushed, tier one banks are reporting providers to say, these people are doing this thing, these people are doing this thing, blah, 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 blah. But like that disposition is key. And you find that some tier one banks are also opening up to partnerships with fintechs, Access Bank, right? But like I was saying, as a fintech, don't rush for big players. Don't rush. Build your traction, build your transaction numbers. Then you go, you will not have a seat at the table. Because if you rush for big numbers, you'll be more of a burden than a value add to a big player. Bottom line is, when you go to a new market, figuring out which banks will talk to you is something that you need to do. So in the US, a community bank is what we would call like a regional bank. You get what I mean? Right. So that's why many community banks are the ones partnering with fintechs, Evolve, all these things. But in the US, a community bank is also exempt from something they call dubbing. So you can literally make more money by partnering with a dubbing exempt community bank to issue cards, right? Than by partnering with a Wells Fargo, a big bank, because those ones are not dubbing exempt. Dubbing exempt just means that if you're within dubbing, your interchange revenue is capped. If you're dubbing exempt, it's not really capped, right? So that's the difference. So the first thing is knowing the license categories for fintechs. Second thing is knowing the banks, their disposition and stuff. And I think the third thing is regulators and understanding where their head is at is very important. Now, in Nigeria, there are certain license classes that is hard to get, and some are easier to get. And this always evolves per CBN drive. So think about it. Now, CBN is looking for dollars in Nigeria. If you go to meet them for IMTO now, they will listen to you, right? Even though they know that many people are not bringing the dollar to Nigeria, so they will still also be questioning it. But generally, because of where they are at, they will listen to you. If you look back a few years, MFB license was because CBN had a drive for financial inclusion. They wanted to get to, I think, 80% by 2024 or 2025. I can't remember the exact numbers. But literally, like, if you time your licensing application for the government's drive, you're most likely to get like audience. Flip side, in the US, because states are issuing banking license, there's a lot of incentive for them to give you banking license because most of their tax revenue as a state comes from taxing all these profitable entities. So if you have the might to go and apply for a state community bank or a state license in the US, why not? Go and try, right? But now, if you go there, they'll question it. Do you know why? Because there's a lot of issue now going on or revealing itself between, community banks, Evolve, and fintechs, Synapse. So your timing needs to be right? So another dimension, if you come to Nigeria, you say you want to get a switch, I'm not sure they will hear you again, because the very nature of the switching license requires that only a few of them exist so that they can recover their investment in the license. So like a switch is almost in the same, like in terms of, so if you think about the shareholder capital for a switch, I think it's 2 billion or 5 billion. I've forgotten the exact stats. But same thing with an MMO, right? But if you have a mobile money network and you don't have many people on that network, it's like a waste. Same thing with a switch. A switch is like a network. You're connecting institutions, either depository or whatnot. So if you can't get many people on it, it's almost like a waste. So the CBN is also thinking about the like market value. They already have enough to generate competition, right? So, there's InterSwitch, eTransact, a bunch of them. So if you come with a switch requirement, MMO, but PSSP, there are like 70 plus PSSPs in Nigeria, but like only 8 switches or MMOs. Do you get, like, so if you don't understand the dynamics, you will just be stumbling. I think the first thing is, do you know that if consumers did not care about fintechs, it doesn't cost the CBN anything to flick them away, right? So one of the major changes is that there's been consumer adoption of fintechs. There's been a lot of acceptance for fintechs and the service they provide. And it also hinges on the fact that consumers want convenience. You've probably heard this from, McKinsey consultants, etc. Right? Consumers want convenience. People want things on demand, right? But that sheer consumer pool is creating a lot of demand for fintech, right? And when you have customer or consumer, the rest of us will align, right? So if a bank knows that if it partners with this fintech, it can grow revenue by 10x, how am I sitting down, right? So let me tell you one of the problems banks have. Banks built their core banking infrastructure. In fact, many of them did not build, they bought, which is which is another level. But banks' core banking infrastructure was such that it's hard for them to add new services, right? So if you have either a monolithic architecture or you have to reach out to someone which is like your core banking developer to always add new things, you just get lazy. Or no, not lazy, you just get discouraged in building new features for customers. And this is where fintech middlemen or middleware providers come in, because they will structure all they do the mumbo jumbo, the magic, and you can keep your infra the way it is. They will go through the hurdle or hassle of working with SOAP API when the whole world is working with REST and GraphQL. So the middleman has figured out a way to talk to your core banking infrastructure and allow you to now enable your capabilities and expose it externally. So this is also one of the reasons why banks are open to fintech partnership, because you can help them sweat their assets, right? They have this license. Imagine if you have in fact, some banks have international authorization. Like, there's literally nothing you cannot do. Like, if my license requirement was that I should be in 36 states, I already have branches in 36 states. Now it's just to find customer. So if I find somebody that can help me bring customer, which is what fintechs do for banks, then I will go for it, right? So banks have seen that the cost benefits of working with tens of fintechs or 15 fintechs to acquire hundreds of thousands of customers is valuable, right? So they are more open to that conversation. So I'll just keep it at those two for now. One is there's a huge consumer, bro. Piggyvest, Piggyvest probably saved more money than some banks last year. It's not a bank, oh. Piggyvest is not a bank. They have 5 million customers. I think they paid out 1.4 trillion naira or so last year, right? So, or 1.4 trillion in a space of 3 years, one of them. But the point is, there's been huge traction from customers to fintechs, and is making banks pay more attention. But this partnership work and this legwork didn't start today. It has been there, but if you look at the innovation curve, there's early adopter, masses, and then late adopters. So, many banks are taking their time on it. The opportunity cost as well, though, also makes banks to look to fintech, because if you don't partner with if you don't build your IT infra, or like if you don't strengthen your IT department to support fintech as a channel of acquisition, you will need to invest more in field operations or in like less scalable operations. So you need to hire more account managers, more relationship managers, go out there, go and partner, go and find customer, bring high net worth. So the opportunity cost is making it work. So I asked my contact at Providus, he's now at FCMB, that if you could build one of them today, would you build a bank or a fintech? That was my trick question to him. He's a banker by training, but because he was group head of digital and the one that was partnering with all these fintechs, I can't remember the answer he gave. But that question alone is a good way to enter the future. I think that, but it's also funny because banks want to become fintechs. They wish that they can remove all these their overhead. Because if you think about it, the valuation of a bank is very poor compared to the valuation of a fintech. You know why? Because of all these overheads bank have, because of all these like constraints, because of like regulation and all those things, right? But they are doing real numbers when I'm fintech. But fintechs, they can easily scale. The growth potential is bigger, right? So banks want to become fintechs. They want to remove some of their overheads, right? And then, have nice margins. But fintechs that are successful, the few that are successful or succeeding, they want to become banks, right? I think that the right future should be a fintech specific or a digital specific banking license for anybody that is interested in it. Now, that requires a lot of collaboration. In Nigeria, unfortunately, our CBN is the only, okay, and SEC, but our CBN is the only banking regulator. In other markets, they have Office of the Comptroller of Currency, OCC. In that same market, they have somebody for consumer protection at the federal level. They have FDIC, Federal Reserve. Like they have many people in that financial services regulation, but in Nigeria, it's only CBN. So what CBN did is to create multiple departments. So there's payment system department, there's financial policy department, there's trade and exchange department, blah, 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 blah. It's going to be a lot of work on them to think up a new license category because they need to be thinking about consumer protection, safety and soundness of the financial system to make sure that it is trustworthy. If not, if it's not trustworthy, all of us will keep our money under our pillow, right? And it can lead to like, a bank run and stuff. But I think that there needs to be a fintech specific or a digital specific banking license with the right level of control and right level of flexibility so that people won't have to be doing all this workarounds, blah, 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 blah. And then I think the second thing is banks will now start taking, if this license doesn't come into play, banks will start taking more responsibility for their fintech partners. In the US, what was happening was Evolve Bank, I don't know whether they lost sight of the fact that they are the regulated entity. They are the ones that the regulator will come to if the fintech partner messes up. In Nigeria and UK, if fintech messes up, fintech will chop, like it will collect from CBN. The bank too will collect from CBN because they both have like distinct licenses and stuff. So like, and then the reputation damage, etc. But in some other markets, it's just the bank that is the real licensed entity. So they need to take more charge of the compliance oversight. But guess what? Fintechs don't like that. So chicken and egg problem. But generally, I think we'll see a lot more innovation in compliance, right? And investment. And I think there will be opportunity for startups to build things in that space. And they need to be building it now. Because once this wave of compliance goes, there'll be a new thing we're talking about, right? That investors care about. So yeah.